as we are definitely the market's trying to figure out what all that means or doesn't mean. Right now, I think with yesterday's rally a little bit, I kind of didn't expect terrible numbers would quickly come down here to the 92 area. And a quick little pop up here. Very nice little rotation. Got right down to 92 for you. And a nice rotation here to give us our quick 3 points. Again, we're trying to take advantage of ebbs and flows of the market, looking for those areas that we can scalp around based on the fact that we don't believe the markets go straight up or straight down. As you can see, we kind of rallied off of this little break, giving us a little quick scalp against the 92 area. Next support level we have is down at 83. As you can see in the chat, there are the levels that we gave out this morning. And a nice quick scalp there with the 92. Obviously, you have to have your orders in place to be able to get in and get out. But, it's with the routine around here. And I got down here to 85 and bounced back up. We'll see if we can get down to the 83 area here, still on the same bar. Okay, well, they popped it down to 85 and popped it back up here a little bit. So, again, it's still on the same bar, so we'll see if it doesn't go retest it or not. Very, very whippy, as you can see. So be very careful and make sure you keep your stops in place. Very, very choppy here a little bit as the market going to come try to see if we can't test it. We have 83. Coming back down, there's 85 again. All right, so now they're testing this 83 area here. Okay, they got it right down to 83 for you. Popped it all the way back up here to 86. That's so nice of them, actually. That's very nice of them. All right, nice little quick rotation, giving us at least 3 points there. Again, we're taking into consideration the volatility, so nice little quick scalp. The orders kind of have to be in place, as you can see. They have to be in place to be able to get filled, and then obviously your exit strategy has to be in place when it goes and ticks it, because it's just obviously if it runs off and runs away, it goes our way, then it's fine. But it's been just whipping around here a little bit. It's a nice little quick scalp there against the 83 area as well. Good way to start the morning here. All right, still under a little bit of pressure here as the market opens up, and the players are jumping here to see what's going on with this as we continue to downtick here. Next support level I was down at the 74 area. All right, quick rotation to the downside here, coming down here to 79 area. We're looking at the 74. And if anybody has any questions, feel free to ask in the chat as we are working off of this CPI number that came out this morning. As you can tell from the release, it was all over the place. It's a little bit more contained, this little trade here. That's why we kind of wait for the market to open up. It's very dangerous to trade those numbers. They just are just very, very thin. There's nothing in there and moves around like crazy. As you can see, it's very hard for you as a trader to try to get involved with all those algorithms. Believe me, I've tried. Now pushing up here a little bit. They got it down to the 79 area. Pushed it back up here. Patience is important. As you can see, we've had some nice opportunities there against our first two support levels. And there they are in a chat for you in case you missed them. No, that one is well. Again, you got to remember the dynamics of the whole situation. You know, with pandemic and etc. And you have to admit that ever since 2007, where you had the financial crisis, which again never happened before, they had to do what they had to do. And so they were all trading, all of a sudden they came up with quantitative easing, So look over the last 20 years or 15 years that the market's been juiced up because of all the money that's out there. So are they never going to do that again? Right. So look, they've had to adjust, I think, because the world is different, bigger, and they've, whatever financial books you read like 10, 15 years ago are already different than they are today. So everybody wants to blame the Fed for stuff, but it's a tough job. And obviously you're going to get some of them wrong. I'm not trying to defend them. You know what I'm saying? I like the volatility, so I'm not really trying to defend them. I'm just saying that, when I was in school, we learned about what the Fed was doing, totally different than what they're doing now. Right? And different dynamics and different the equations probably that they're looking at, because they're taking into account a whole bunch of different things. All right, we're coming down here. We got support here at 74, and trust me, I'm not defending them. I'm just thinking out loud that how kind of goofy job they had. Everybody was blaming them for 2007 when the financial stuff happened, but first of all, I think they made money on the whole deal, and they helped stabilize a bad situation. Because it was dark days those days, I'll tell you that much. It was gloomy with a capital G. All right, we're coming down here to low support here at 74. Again, you gotta, again, if you're a little bit too concerned about the volatility, I get it. Otherwise, just trade it as it comes. Take whatever the market gives you. Okay, coming down here to the 74 area now. Again, whatever we do, make sure you keep your stops in place. And this one's not giving us the same reaction we got on the last two, obviously. So, if you want to lighten the load a little bit, definitely could. All right, kind of continuing down here to 7D. Again, make sure you keep your stops in place. Support level we have is down at the 65 area. All right, the market continuing to downtick here a little bit, looking at the 65 area next. Getting a little bit heavy here, kind of looking to see what it wants to do. Quickly coming down here to the 65 area. Again, if you don't like the price action, give you a chance to exit some of them. Sometimes you have to manage these trades a little bit differently than you would like, but that's what you can do as a trader. Going to give you another chance here to exit some of your contracts if you're trading multiple contracts. If you don't like the price action, there's no reason to say that you have to stick with it. We never know when we're going to get these vacuum moves here, right? One way or the other. Now we're just getting a little, trying to give us a little bit of money here against this 65 if you still have any left over. Nice little bar here, right? Got up. Okay, these 2 hourly bars are crazy. All right, a little bit of a little rally here for us against the 65 area, a little bit. They get down to 62 and change there, so I don't know if he got stopped. I shouldn't have got stopped out again, but maybe you definitely give me a chance to scratch some of these trades here. Or take a little bit of a profit. All right, trying to work the 65 area here a little bit. Being stubborn down here, but giving us a little nice rotation there. Took a little bit of work, but hopefully you were able to hang in there with it. Some of them anyway. Let me give you some more levels here below the 65, so I can put a kibosh on this rally. Next level on the downside we have is 53. I mean, the kibosh on the break. Then below that we've got 46, and then 34. And then 28. 46, 34, 28 on the downside below. The 53 here. As you can see, the 53 is a retest of that little spike that occurred after the number came out. Okay, again, if anybody has any questions, feel free to ask in the chat. Had to work that one just a little bit there. There's the additional levels in the chat for us. Thanks there, Don. Let's see here if we have other reports coming out this morning. I don't know what could be more market moving than that. All right. Yeah, 39.50, the spike there is 53, so it's all kind of, but yesterday was 55, so they all in that same area. Okay, coming down here, next support level down here is a 53. Again, remember we have that retest of the spike. The 50 is yesterday's good support. 55 was the pivot, so kind of all that area there is a little bit of support that we have. We'll see what it wants to do if we get down there. Let's see if there's any other numbers coming out this morning. And no other, but we do have a whole bunch of a couple of Fed speaks coming out at 10:30. Bullard is talking. He's always seems to be moving the market a little bit, so that's going to be at 10:30. Then 11:30-ish, Barkin is talking another Fed speak at 11:30. So 10:30 and 11:30, these guys are talking. Could get some volatility. All right, so we'll see what that brings. Let's see, as the Federal Reserve ratcheted up interest rates, inflation has started to cool according to many recent economic reports. Most recently, wage growth rose less than expected in a December non-farm payrolls report, resulting in further assurance that wage price spiral has not developed. Average hourly earnings from previous months have also included slight downward revisions, giving hope that the price pressures will finally melt away. Investors today will see if that trend is continuing, and the Labor Department publishes the latest consumer price index. Headline number is supposed to be 6.5. Like I said, all those numbers came in right on target, right? I guess maybe market was expecting a little better. You know, there's always that whisper number, right? So maybe they were, you know, with that rally over the last few days, maybe they're expecting it to rotate back. But again, we've had a nice little rally off of the, we went from 39 to 44,000. So I guess it's kind of just bouncing around here. I think it wants to retest this spike low in this 55 to 50 area, and we'll see what happens from there. Chairman Powell mentioned at his December press conference that services component of inflation, excluding housing, was particularly concerning, as that tends to be harder to root out than goods inflation. Some are even going more hardcore, seizing up on the figures without housing and healthcare and even other categories. And keep in mind that the Fed's policymakers generally give more weight to core personal consumption expenditures rather than the CPI, which has diverged more than usual since early last year. The reaction from market participants at 8:30 will depend on what they expect the Federal Reserve to do in response to this report. Well, they don't know what they want them to do, because look at it, it's all over the place. Traditional sentiment would say that a much cooler reading would prompt the central bank to continue tapping the brakes on rate hikes, though others feel that it alone may not be enough for the adjust the Fed's policy path, with unemployment rate and layoffs remaining low. Layoffs remaining low, I don't know about that, and job openings still high. A more meaningful softening in labor demand and wage growth will be needed, said some analysts. Labor conditions have weakened over the past year, but remains too robust for the Fed's liking, he said. So everybody's guessing as to what the Fed wants to do or not do, right? I mean, that's the bottom line. That's why the market is doing what it's doing right now. Look at the bond market. You know, they all over the place. You don't know how rare it is to see a bond market move of 3 points like that. Well, it used to be rare, not anymore, but. To get a four-handle day in the bond market, very rare. You got 30, 29, 28, and then 27. It's very rare to see a four-handle move in the bond market, but that's what we have been seeing lately, and that's a big move here, one way or the other in the bond market for sure. And we'll see what happens. The bonds are all over the place. The bonds are only down 15 ticks. And the 10s are up 3 ticks. So there's a little steep inversion of the yield curve here. It's not inverting. It's flattening out just a touch. All right, bond S&Ps here drifted down to 57 there, I think. Let me see. At a 57.8 area, and then pop back up. We were talking support between 55 and 50 there. And I gave more levels, so kind of telling you what's going to happen probably. May give you more levels to the downside. So there are no more numbers, except there will be some Fed speaks. The major U.S. airlines, including Delta, Southwest, United, expect that operations to return to normal today after disruption. Stranded travelers across the country, when all is said and done, nearly 12,000 flights were delayed or canceled on Wednesday. Within, into, or out of the United States, it also appeared that the first nationwide grounding of domestic traffic in over 2 decades, with the last one being September 11th of 2001. The FAA traced the outage to a damaged database file on the computer system that generates alerts called NOTAMs, or Notice to Air Missions. Those notifications must be reviewed by pilots and airline dispatchers before taking off, and they include details about bad weather, runway closures, and nearby airspace activity. Officials also noted that the outage was not a result of cyber attack, though a similar system interruption occurred in Canada on the same day. Many of these systems are on old mainframe systems that generally are reliable, but they are out of date, said executive operation for American Airlines. Well, I don't know. All right, so we got down to 57.8 area there and popped back up. We were looking anywhere between 55 and 50 as some support. Never didn't get down there. It's still there, but we'll see what happens. All right. So that's it for numbers, and we do have Fed speak at